Ladies and gentlemen, at the indices still holding on to positive territory. Well, 3 of the 4. We've got rates which are coming off at a rapid rate, and that's weighing on the Russell. It's down 1%. Ladies and gentlemen, let's bring in Alan Nuckman. He's a chief market strategist at Agora Financial. He's joining us here to help us get ahead of the busy day ahead. Alan, welcome.
Yep.
Thanks for joining us on this Wednesday morning. We took a look at the indices at the top of the show and financial markets. Let's talk commodities, but first I wanted to get your take on the overall developments related to last night and, well, the lack of decisive results, I guess one could say.
Well, it is somewhat decisive in the fact that if you put together, Nevada, Arizona, Michigan, and Wisconsin, there comes 270. So if you're looking at the probabilities,
the road
it's
to
there. The path is there. Now, regardless, if you're a trader and a price guy, which we are, if you were not focused on this event, what we saw last week was a textbook test of those lows in the S&P. We went to 3,200, which was a higher low than we had in September. We bounced off it once again, and it's been green since then. So if you're looking big picture and you could ignore this, this event, you would be very, very bullish by the reaction in the market last week and building on it this week. We're within striking distance of the all-time highs, and it's not just us. It's not just the United States. If you look at Japan, the EWJ, if you look at Germany, EWG, if you look at FXI, which is China, they're all within striking distance of their highs. So there's global stability in the stock market and stability in bull trend.
Now, do you think some of that stability, Alan, is why gold, for the most part, has pulled back significantly? I mean, one of the things oftentimes that, provides that catalyst for gold to the upside, you could talk, stimulus measures was certainly one of them. That, in my opinion, was what provided that 2,100 all-time high that we saw. But gold's really pulled back as it seems like the indices have kind of found stability. And as you mentioned, basically accepting price activity and kind of digestive trade near these all-time highs.
Well, gold is its own animal. And so, you saw the price action last night where it was down $20 and it was positive. Mm-hmm. So you're getting a lot of movement, but it's holding this 1900 level. I think, again, the key is what we're going to be talking about today. It's this dollar. The dollar had firmed in the last few sessions when we had macro weakness. The dollar had firmed, but it was only at 94. So it wasn't a flight to quality rush. It was just a little minor bounce. And now we're back down. And so we're down significantly off that 94 level, pressing on 93 once again in the dollar. So I think that is more an indicator than anything else. And you're seeing a little bit of flight into the Treasury. So those were up 2 points in the long bonds when I looked at them earlier this morning. But you need to let this all sort itself out. But I think the focus obviously is on the macro picture. And the macro picture is showing us some stability and the tech takeoff. We're a big run up in tech, which has been obviously the leader over and over again. Let's remember where we are in this last decade. We are in a bull market that hasn't broken. Optimism wins, and this seems no different. We're seeing a market melt up, and this is not unexpected if you just focus on price and the way the price has been reacting.
Yeah, oftentimes I do only focus on prices. You know that as a trader, a technical trader, Alan. And when I see balance like this, it speaks to kind of what you're talking about in terms of some of the acceptance of. And let's talk a little bit about the dollar and, again, the impact that this can have on indices. We are talking really a lot throughout the show about how the status quo continues to be. It seems like potential for gridlock in terms of Congress and some initiatives there. Also, again, we're seeing reflection of expectations that things are going to, for the most part, remain the same. In terms of some of the price activity, the dollars remain very much range bound. I mean, what are we seeing here as far as the dollar and the influence that has on the indices right now? I mean, ultimately, we know the Trump administration has wanted a weaker dollar. They've been very vocal about that. It seems very supportive and still very much range bound.
Yeah, it's stuck in a range until proven otherwise here. If there's, global currencies, everybody's wants their weakness, and that's always been the fight. So that's something that we'll want to focus on, and we'll want to see what happens here in the near future. But I'm very encouraged by the fact that it didn't have an extreme rally when there was a lot of fear in the macro market. And you get back to that fear, the VIX right now is back down to 33. It was up to 40, but still at 40, it was at half of what it was in March. So even though we were excited by this election, and the markets were very excited and had some anxiety about it, the numerical measure of that was half of what it was, and treasuries hadn't rallied and the dollar didn't rally. So these are all signs of the path of least resistance, which is a bull run. Now let's talk about some of the commodities. You mentioned copper. Copper's holding about $3. Freeport-McMoRan is a copper play. They just made new 52-week highs yesterday. And you also mentioned crude oil. Crude oil's been just kind of left behind, and as a trader, it's disappointed me because the opportunities aren't there the way they used to be. Because we want the markets to move. We want volatility. Volatility is opportunity. So I think it's just a matter of let the markets tell us, and not try and think too much about what could happen, what is happening, and how it's going to impact. Let's see and trade what you see is a mantra that we use over and over and over again, and that's just what I'm going to continue to do till proven otherwise. One other indicator. This is all about Apple. I know I've mentioned this a couple of times, and this is getting there deeper in the weeds. Apple obviously is a bellwether. They made $13 billion in pure profit for the quarter. That's more than some companies make in a decade. But the stock sold up. But again, look at it technically. It went down to that previous low and it's bounced back off it. And right now it's still 20% off its highs. And you can lean on that 100 level. So it's about risk reward. And Apple obviously is a huge indicator of how the overall market's doing. And I think that's got some great upside potential at these levels. It's extremely attractive. If you're not attracted to Apple at 20% off, I don't know when you're going to be.
Alan, Apple at these levels, crude oil, copper, if we were to see further price decay amidst coronavirus numbers, spiking uncertainties related to, even if these election results were to get drawn out, potential U.S. Supreme Court decision related to, would you be concerned if some of these markets started to open up the door to the downside, or do you think they would continue to find support associated with that Fed put kind of narrative?
Yeah, I think there's always going to be that underlying thread to support the markets. That's just the nature of the way things work right now. I'm leaning on that. But more importantly is the overall big trend. For whatever reason, whenever the markets have any sort of crisis de jour, the markets come snapping back. Yeah. It's the fear of missing out, and it's also where's money going to go in the chase for yield? That hasn't changed. Until that equation changes, who's going to be putting their money into treasuries? The S&P yield is significantly better, and until that equation changes, which I don't see changing for a long time, stocks still are the place to be. But it's about being smart. It's about using those opportunities to buy on dips and sell on rips, and that's nothing new here. The events change, but everything else stays the same.
Right back to where we started. Started seems to be a theme that we're hearing quite a bit throughout the show here today. Alan, really appreciate you joining us here. Alan, ladies and gentlemen. Alan Nuckman, that is the chief market strategist. He's joining us from Agora Financial. Now that we've covered the fundamentals and taken a look at some of the election results, what to get ahead of or what you should be keeping an eye on today in terms of headline news and market activity, let's take a look at some of the technicals. Let's take a look first and foremost at crude oil, which has seen a nice bid come into play with the indices